The price of Bitcoin right now, it's not doing a lot. You've probably noticed. But I feel like it's this calm before the storm moment. The clock is ticking on, well, the next big move for Bitcoin. And until a Bitcoin ETF happens, where that move goes, well, probably going to largely depend on the overall macro situation, which is not super awesome right now. Fears out of China, fears of a global credit event worse than 2008. Lots of scary things happening. Price of oil surging again. So on and so on and so on. Fear, be afraid. That's what the markets would like us to think anyway. And of course, there are a lot of reasons to be hesitant in the markets right now, to not bet too hard. We're seeing new bankruptcies coming in and all these kinds of things. So we do have to have a bit of caution in the current market situations. And too much fear ends up being a bad thing. Too little fear can also be a bad thing. Little sprinkling of fear can be the right amount in the current market situation. Now, the price of Bitcoin currently not doing a whole heck of a lot. Old man Bitcoin. We are sitting still, basically. I feel like the price of Bitcoin's basically been the same for the last month, approximately. And yeah, we had a nice little pump last week on the grayscale news, which was immediately retraced massively. But right now, Bitcoin's still just hanging on by a thread to the 200-week exponential moving average. Currently, at the time of recording, sitting at, where are we at? $25,750. If we can keep these weekly closes above the 200-week EMA, maybe that sets it up as a key line of support. Maybe we can bounce from there. But that depends a lot on the macro fear situation. Of course, this 25K area is a very, very key price area for Bitcoin. I know we've talked about that a lot, but it is a very critical level. Huge amounts of Bitcoin have changed hands at three places that are of particular interest to us: $20,000, $25,000, $30,000 approximately. That means right now we have a huge area of supply support here as well. Lose that, then we can see 20K come real fast. So that's something to keep in mind. Also very interesting to take a look at the RSI right now. So basically the RSI has been in an uptrend. If we go all the way back to June 22, we can see that the RSI put in a very strong oversold reading at that time. Since then, we've had some higher lows coming in. FTX crash is one of those. The general malaise of Christmas approximately was another one of those. And now we are coming down and testing that line again at the current levels. Will it hold? Will it hold? That's an interesting question. I guess we'll see. But if we see an RSI downtrend break through that uptrend line, things get pretty messy pretty quickly here in the markets. Again, lots of fear in the markets currently. And besides my big spot positions, I'm not in any trades right now or anything like that. I'm just kind of sitting back and waiting for the market to decide what it's going to do. We're also seeing currently a massive rally for the dollar. So this is the DXY index. Now, the dollar came down and actually bounced off the 200-week exponential moving average. That was in the middle of July. Ever since that time, the dollar has been undergoing a pretty significant rally, moving from 99.6 when it hit the 200-week exponential moving average, all the way up to 104.9 currently. And that 104.9 level, which has been green candles, by the way, nonstop green candles, nonstop dollar strength since that middle of July moment, nonstop dollar strength. This 104.9 level, super, super important, because that marks the local top back in the end of May, and that marks the local top in the middle of February. And of course, if you go back even a little bit further, you can see it was also a key area of resistance in June of 2022. So if we see a breakout happening here, that could spell bad news for risk assets in the short term until we see the dollar index cooling off again. That means your tech stocks, that means your magic internet money could all be facing a bit of headwinds if the dollar continues to gain strength. So we need to see the DXY cooling off a little bit, give these risk assets a bit more room to breathe. But the dollar is currently looking pretty strong, unfortunately. Rect Capital here pointing out that terrible September ahead for Bitcoin. 5 things to keep in mind for this month. Really just underlining this thesis that so often we see relatively crap Septembers for Bitcoin markets in general. But yeah, Bitcoin, of course, a very key asset for us to talk about here. So September tends to be a negative month for BTC, as he points out. 8 of the 10 past Septembers have experienced downside. Only 2 saw small single-digit gains in the month of September, +2 in 2015 and +6% in 2016. Frequently occurring September retrace is -7%. So most often, there's a single-digit drawdown in the month of September. Sometimes that's a double-digit drawdown in the month of September. So the worst one that we've had was actually 2014, where we had a 19% price drawdown. Now, if we had a 19% price drawdown for Bitcoin from the current price levels, that would bring us all the way down to around $20,000, which is our next key area of price support here for the Bitcoin markets. Not saying that's what's going to happen, just sharing historical data here, of course. Rect Capital goes on to say chances for a massive crash are unlikely. In 2019, BTC just saw just a 13% retrace. 2019, there's so many parallels going on with 2019 right now, aren't there? It's just crazy. It's crazy. History doesn't repeat, but it sure does rhyme sometimes. He's saying likely retrace to be between 7 and 13% down. That could see price drop from somewhere between $22,500 and $24,000 if the September curse plays out. By the way, go follow Rect Capital over on X. He writes our weekly pieces in the Wealth Mastery newsletter for our technical analysis stuff. He does great work. Now, before we get into the rest of the charts here, just a real quick reminder, if you are a cryptocurrency trader, you got to get yourself an account over on BYBIT. It is the best place to be doing trading. If you want to trade futures, they got you covered. Huge futures markets. If you want to be trading spot altcoins, exotic spot altcoins, they got all kinds of crazy stuff over there. They got you covered for that too. You want to do copy trading, outsource it to someone else, you can do that on BYBIT also. And if you use that link down below in the description to start your account, you're going to get up to $30,000 in deposit and trading bonuses, depending on how much you deposit, how much you trade, plus exclusive fee discounts. So go and check it out if you are a trader using that link in the description. Now let's talk about the Bitcoin ETF. So this is from James Seifert. He's a researcher over at Bloomberg. He said Grayscale's letter to the SEC from their lawyers can be summarized as, yo, what's good? Call us back. So Grayscale submitted a letter to the SEC. Remember, they run this big court case last week, and you think the SEC would call them up and say, hey, guys, let's work together on doing anything. Nope. Radio silence from the SEC. They're like little school children. Oh, we lost. Now we're going to go run away and hide so you can't even talk to us. You got to come hunt us down now. Yeah, come knocking on our door. Knock on it many, many times for you to get any answer. The behavior of the SEC is just, it's pathetic. At this point, it really, really is. The way they're behaving with these companies, like, yeah, you just got smacked down in court. You could take it on the chin and say, you know what? We lost in court. We're going to follow the letter of the law because we're a good agency. We're a good actor in this space. And we had our concerns and the court said, no, your concerns are not correct. And we're going to follow that. And we're going to sit down with Grayscale now. We're going to hash this out. We're going to find out how we can convert that into a Bitcoin ETF because that's what we're going to do as a responsible organization. No, none of that BS. No. Great. The SEC is just basically blocking Grayscale everywhere. Block on Twitter. Block them on Facebook. Block. Who's this calling? Block. Don't want to talk to anybody here. Somebody knocking at the door. Got some mail for you. No, don't want that. Return to sender. What kind of behavior is this? It's absurd. Absolutely absurd. But a Bitcoin ETF will come. BlackRock may simply need to be the first one. Maybe that's the deal. Grayscale can't be first. It's got to be BlackRock. $241 billion asset manager founder Rick Edelman is predicting that Bitcoin will reach $150,000 by the summer of 2025. Cool. I'm feeling you, Rick. I'm feeling the 150K vibes here, buddy. I think that's a reasonable price expectation. We're going to have to pull off, a little bit of perhaps macroeconomic insanity between now and then, between now and the Bitcoin halving potentially. We do still have some major risks in the global economy that might need to play out. Maybe we get a soft landing. Maybe everything's okay. Maybe, and maybe not. But then you have to realize, even if things get really, really bad, they're usually really, really bad for a very short amount of time. The bounce back will be epic. That'll set us up for a new run. Maybe that's what we need to get a new run. Maybe we need this final, just big slap in the face for the market. I hope not, just because it's depressing and everybody gets depressed and angry. And I don't like those vibes, man. I want everybody to be happy. I want everybody to make money. But we'll see. Anyway, this is a price prediction that I can get behind because it, of course, aligns with my own price prediction. Obviously not biased here at all. Of course, totally biased, but great to see other big asset managers coming out with, I think, realistic price predictions. The people, when we get to 150K, if we get to 150K, I hope we get to 150K. When we get to 150K, that's when everyone's going to start calling for, we're going to 300K, we're going to 500K. That's the danger zone. That's the danger zone. I screwed up last cycle by just getting completely wedded to the idea that we're going to 100K. I was wrong. And that prevented me from taking as many profits as I could have taken. So we'll see. Of course, I'm more interested in watching where the market is versus a particular number, but I think 150K is a reasonable expectation, to be honest. Alliance Bernstein, or AB Bernstein, they are predicting a spot Bitcoin ETF will be approved between mid-October, which is when we see the next deadlines coming up. And between mid-March is when the final deadlines are coming up. So great prediction here, guys. But realistically, the BlackRock Bitcoin ETF does stand a pretty good chance of getting approved. And those are the deadlines. That's the time. So you think about how crazy that is right now in the market. Can you be patient till March, April of next year? By April of next year, most likely, most major analysts are putting the chance of a Bitcoin ETF being approved 75% this year, 95% in 2024. It's looking like it's incredibly likely that we're going to get a Bitcoin ETF by the time of the Bitcoin halving. So we get the Bitcoin ETF, we get a Bitcoin halving straight after that. And even if we've had this craziness happen in the macro scene, that's probably going to be cooling off by then. Rates will probably be starting to be cut. People will be climbing out and after the storm and going, oh, is everyone still okay out here? What's going on? And then we get ready for the new major bull cycle. Might be a few months. I'm patient. I'm ready. As long as World War III doesn't happen, I think we're good, guys. World War III happens. Well, it's been fun. I guess that's it, right? Holy cow. Also want to share this with you because it's pretty gosh darn interesting. This is the daily exchange volume. And it shows some pretty crazy stuff because let me read these numbers out here for you. Currently, this is the 7-day moving average for exchange volume. Currently, we are at a $13.2 billion daily exchange volume. Sounds like kind of a lot, but it's actually like pathetically small. Because look at the peak, right? The peak we had $160 billion, 10 times more volume in the market. 10 times more volume back at the peaks. And actually, over the last year, we've been approximately twice this volume. Even throughout a lot of 2023, we've seen volume spikes up to $25, $30 billion. We are at super low volume right now at $13.2 billion. And if you look even further back, last time before, looking at the previous cycle, last time prices were, or the volume was around this level, was back in 2020, before everything got crazy. So there you go. The rational root here pointing out as well that we are currently reaching the stagnation phase. So if you look at the psychology of a market cycle and where we have been, we go through all the phases: belief, the thrill, the euphoria, complacency, denial, panic, capitulation, depression, endurance, and now we're at the stagnation phase. And the stagnation phase is definitely this phase where the volume's super low. Social media's got super quiet talking about cryptocurrencies. There's not a lot going on right now, and that's so typical, so indicative of this kind of phase right now. We are really just going right around in this market cycle of human emotions. And we see it playing out. And then when the Bitcoin ETFs get approved and the price starts moving, that's when we enter the disbelief phase. And then people aren't really going to believe it. No, there's too much macro bad stuff going on. That's when we enter the doubt phase. Everything's too bad in the macro. Prices are never going to go up. Prices start moving up. Maybe we get to our previous all-time high. Hope starts coming back into our markets. Optimism starts coming back into the markets. But we got to get through the cycle. We have to get through the cycle. This is the tough part. This is the tough part, is now enduring. 2023's had some opportunities. There's obviously been nice price movements, and there's been lots of good things happening in 2023 so far. There's also been a lot of fear in the markets in 2023. So, we're far from out of the woods, let's say, but we are moving in the direction of exiting the woods, but still got a bit of a drive. And I like this one from Stock Money Lizard, showing how the price moving forward could go. Because we see all of these news stories that we could potentially have coming that could provide that rocket fuel in the market, right? Whether that is seeing new institutional investors coming on, whether that's the Bitcoin ETF, whether that's the halving, whether that's, more increase of the Lightning Network, any of this kind of stuff. Once we start a big move in the market, that is when we can see positive news actually starting to have a positive effect, because the grayscale victory, the XRP victories, that's big stuff. Hasn't really moved the markets in a very, very significant way. We've even basically completely retraced the BlackRock news at this point. Like, everyone's forgotten, oh yeah, BlackRock's going to get a Bitcoin ETF soon and bring $30 billion into the market. Nobody cares anymore. That narrative played itself out. The reality of when that happens is going to be big, but it's not happening today. And so people have lost interest. We lose sight of the fundamentals when things aren't very exciting. And that's just markets for you, baby.